Hello, traders, and welcome to analysis of gold XAUUSD. My name is Vic. Thanks for joining me here. Let's start looking at gold from monthly time frame. So, what we have is actually a W pattern here, and which made the price fall. Then the market went up to create a double top sort of pattern here. And in our FCP methodology, we have W pattern in the middle of it. Now, when W pattern completes, the market falls. Hence, the market has been falling. Now, as you can see on higher time frame, if the market continues to fall and breaks through the 1680 level, we will have an M pattern here. And that's a very normal scenario. The normal scenario is basically where you have W pattern and then you have W inside and then we have an M pattern, right? So that is a very common pattern that actually appears in the market. But because we are looking at monthly time frame, it may or may not happen and it may take several years as well. So just wait, and trade what you see here. So this is what we have on the monthly time frame. If I go to the smaller time frame, let's say weekly, we'll see the same pattern but in a better definition here. So we have something like this. So we had a W pattern here, which most of the FCB traders were aware of, and they have been looking into this. They have been trading this. So we had fall from here, and if you notice again within this structure, you have multiple M and W patterns here again. So what we have here is actually this was a W pattern, and after a W pattern, an M pattern comes. So right now, the market is in the formation of M pattern, right? And when it is trying to do that, at some point in time, it will reach a level, and after that, it will start to go back up. Now, it may or may not go all the way high up. We'll see how the market behaves. But what we can see is that okay, with that market is approximately is going to reach a level, and from there, it is expected to rise. Since then, it is expected to fall until that level comes. Okay, so if I go to the daily time frame now, on daily time frame, it's quite evident that we had very good pattern here. We had a W pattern, and if you go through my previous analysis, I mentioned that there was a supply zone here, and the market was expected to fall from there. The market was expected to reach this particular point. If this was going to get violated, then there was a bigger W pattern which was going to complete around here, around 2030 or something. But market never reached there. It reached this level and started to fall down because this was a very good supply level, and it kind of reacted to the previous structure level, right? Same thing here. Okay, so the W pattern made the price fall, and now we are in the formation of M pattern. Now, this M pattern actually does not complete where you saw little bounces, right? These two little bounces here, one here, one here. It actually completes somewhere around here. Now, because the market created this bounce, I'm expecting that, this bounce may not come. This market may not just stop here. It can still happen, but the probability of this happening or, finding a support here at this level is not going to be that strong. So trade what you see when the market comes here. If you get a confirmation to go long, do that, but manage your risk. What I'm expecting now is that market can actually do something like this. It will probably come here and go back a little bit and then fall back down. And this move can be large. It can be very large move. Okay, why I'm telling you is this, why I can see this. I can see this because the market is creating shallow corrections. When the market creates shallow corrections, that means the market momentum in the opposite direction is actually very strong. So this is a shallow correction, and if the market breaks through this level here, the previous structure level, then it will probably create a larger impulse. So that's why the gold can actually fall down to somewhere around here, creating an extended M pattern. So normal pattern would have been stopped here, but this can actually this can go to extended one. So let's bring in the original analysis. So this is what we had last time. This is the level that I gave, 1988, and I said you should watch this level. That's why this was highlighted in blue. The market came here and started to fall. Since then, it has been falling. Then what happened? The market created this M pattern. It was starting to create an M pattern. This was the midpoint here. Market went up. I said it has broken, and now it is retesting. Then it came to minor FCP zone here, and then started to go back up. Where did it go? It went to the previous FCP zone, and since then it has been falling down. So if we go deeper into this structure here, local structure, okay, what you can see is this: the market broke through the midpoint of this M pattern. That was the midpoint. Then it went up. Okay, performed the retest, fell down to the previous FCP, to the next FCP zone, then went up where, to the same FCP zone. From there, it has been falling. Now it is back into this FCP zone. So this FCP zone can actually, like, act as support. So if you're day trading, or if you're trading smaller time frames, then it can still give you, like, short-term opportunities, as it did yesterday. There was a bounce from here yesterday as well. So as long as the market is inside this range, you can place this range, like, up and down, up, down, up, down, up, down. So this can still keep on going. Now, as soon as we get a confirmation below this FCP zone, this one, right, which is at 1865, then we can expect market to fall down to this lower FCP zone, which is 1843. But as I said in my previous, at the previous part of this analysis, that it may or may not actually, stop there in FCP zone, in this FCP zone anymore. And I'm expecting that, if it doesn't stop, then it is going to continue to fall hard into the next M pattern, which is going to be an extended one. Okay, so what we can do, watch out for a breakout from this FCP zone around 1865. Okay, if the market keeps on, getting support, you can obviously, take longs and whatnot, right? So if the market continues in this range, you can play shorts and longs depending on, how you're getting confirmations and whether it satisfies your trading plan. If the market breaks through this FCP zone of 1865 and gives you confirmation on a daily basis, then you look for a short going for 1843 FCP zone. As soon as it reaches there, then you should wait for further confirmation. If you get long confirmation, go for it, but manage the risk, because there is a chance that market can actually violate this FCP zone and fall down. Okay, so this is what you should be doing. Now let me show you the higher time frame move that was predicted weeks or months ago. So this was the higher time frame possibility. The market came here into this red, which is 2000, right? And then kept on falling. Last time it reached 1855. The next level can be 1831, and then it can fall further below. Remember, this is larger time frame, and this was, produced weeks or months ago, so it may not be that accurate, but it gives you a little idea where it could be going. So ideally, you should be looking into the previous analysis that I just gave you. This is the pattern that we are looking for. Okay, so the pattern that we are looking for is something like this. So if the market actually violates, this is where we are right now. Okay, as I said, we are in a an M pattern. Okay, now the market can actually fall down to this level, which is 1843, and we have 200 moving average lining up there. So this can actually provide a very good support. But if the market violates this, then what we have this trend line, and there are a couple of trend lines here, right? So there is another one here. So there are a couple of trend lines. All of these can actually produce opportunities to go long, right? But if they get, violated, the next FCP zone is going to be around this level, which is approximately 1716. Okay, 1716 to approximately 1702, which comes out to be, the same area where we had, this triple bottom. So if the market continues to fall down beyond this FCP zone and beyond these trend lines, then we are looking for somewhere around 1716. There can be an intermediate level here, which is 1742. Okay, so this is what we have on gold. If you enjoyed this analysis, make sure to hit the like button, subscribe to the channel, and share it with other traders and trading communities. Have a great trading week.